Welcome to my humble abode, guys. Today I decided to bring my crazy dogs to work, but what I wanted to show you here real quick, this is the median price for homes in the DFW area, okay? Back in 2003, it was about $125,000. I can tell you when I joined the market back in 2017, the average sales price in the market was a little under $250,000, okay? However, we have had an enormous amount of appreciation over the last 5 years to the point where when our market capped in the middle of 2022, our average or median sales price in DFW hit $400,000. Now there's a reason why I've had a huge amount of appreciation and growth in my net worth. This is exactly why, guys. But the real reason why I'm making this video is, what do we see here, guys? We saw the tip. The tip now is coming down. Our average sales price in our market has fallen from $400,000 to now $375,000, and I don't think it's ending anytime soon. So yes, guys, real estate market, fortunately for some and unfortunately for others, is certainly changing. What's up, guys? It's McKeown back again with another video this week, and today I'm going to discuss kind of the evolutionary change over time of the real estate market. As we all know, the beginning of this year and really from, I guess, the first couple months into 2020, we've had an outrageous real estate market. Now, all the way really up until June or July of 2022, the market was still hot. And then, however, it really overnight fell off of a cliff. Now, I'm certainly not an individual that is all doom and gloom. I do have a house under contract that I contracted about a month ago, even when the market was still trending down. I even have houses in that local neighborhood that are continuing to sell. This is a house out in Florida. I am someone that is kind of in limbo with interest rates and where they may be or may not be when it comes to closing on that property. So as far as when it comes to people asking, hey, should I be buying? Should I be selling? Should I be even involving myself in the real estate market? And I would say it honestly depends on your situation. Now, me personally being an individual that is not a fan of renting, if you're renting and just throwing away your money, then yes, go ahead and buy, but be very, very creative when it comes to doing so. Now, you may be asking, what do we need to be paying attention to when it comes to the real estate market and whether or not, hey, our interest rate's gonna go back down, our interest rate's gonna continue to climb? I would say right now we're a little over 7%. If you've been following the real estate market, and I've been telling people before, I closed on an investment property, which is about 1% higher than a standard owner-occupied home, December of 2021. So not even a year ago, at 3.75% interest. So you're talking, if I would have occupied that home, I'd be in the high twos. Now, if I'm gonna be buying, and I am buying that house in Florida, I'm looking at an interest rate in the sevens. That's more than doubled, guys. So yes, mortgage rates are what is causing a majority of the real estate market to not necessarily crash, which a lot of people want to say it's crashing. It may be, it may not be. I mean, it's hard to tell truly at the end of the day. Honestly, if I had a crystal ball that was 5 years from now, we'd be able to know, but obviously no one knows where the market is headed, how much further down it's gonna go, if we're gonna plateau and go back up. But I can tell you a lot of it's gonna be affected by interest rates. So what are we looking for exactly? And I can tell you it's all based around inflation. Now, I'll give you an example of about a month and a half ago, and I would say in the next coming days, we're gonna be getting an update on inflation. So when this video is out, we may actually have better interest rates or worsening interest rates depending on where inflation comes about. But I can tell you about a month and a half ago in August, when we did get an update when it comes to inflation, inflation was actually worse than expected. So since inflation was worse than expected, rates continued and are still continuing to climb. Now, I can tell you, with expectations on where inflation is supposed to be at, if it comes in line with that, I would say we will have a plateau, maybe a little bit better mortgage rates than where we're at. And on the flip side, if inflation comes in better than expected, that's when you're gonna start to see rates go down. And inflation is also affecting the overall stock market. Now, me, myself, I'm not an expert in the stock market. I have a couple retirement accounts and I have a personal stock account, but I by no means am no expert when it comes to trading or just knowing everything when it comes to the stock market. My expertise is in the real estate market. And just to use an example, guys, I had a conversation just a couple days ago with another individual. That individual is in a separate market of mine and very much still, in his eyes, in a seller's market. Now, me, myself, being in the DFW area, I can tell you in the middle of the year, probably around March, April timeframe, we were less than a month of inventory. Now we've risen upwards close to about 3 months of inventory. If you're looking at this comparatively to what is a typical buyer's market in the last couple years, 3 to 4 months is a standard buyer's market. But the fact is that 3 to 4 month of inventory is something that we've stayed at consistently. We haven't gone from 0.9 months of inventory to almost 3 months of inventory in just a couple months. Now, this is telling you that, yes, we're about to hit that threshold that would constitute a a buyer's market, but the fact that we've risen so fast to that 3-4 month threshold of a buyer's market, I can truly see, and we're about 2.9 from about 0.9 just a few months ago. I can see that 2.9 continuing to increase above and beyond what would be a standard buyer's market, where a lot of people are going to probably have the opportunity to get homes at a significant discount. But that's only going to happen if inflation continues to rise or if inflation comes in at a higher point than expected. So yes, the biggest thing, guys, moving forward, we need to watch where inflation is at. That's truly going to dictate where mortgage rates are at, and I can tell you just based off of working with buyers and sellers on a daily basis, people that are looking to sell and then buy, looking at the interest rate that they have on their home right now and looking at the interest rate that they're likely going to get on a new home, it is a huge deciding factor when it comes to whether or not someone wants to sell and purchase, whether or not even someone that doesn't own a home wants to purchase. But at the end of the day, as I mentioned earlier, I'm still a huge advocate, even in the 6s, the 7s, the 8s, to be purchasing a home. As long as you're creative about it and you're willing to do a little bit of sacrifice when it comes to it, such as house hacking, a single family, renting out the rooms, buying a multifamily, living on one side and renting out the other, just being a little bit creative when it comes to buying a house, rather than getting your first house be your dream house in that perfect location with it being perfectly updated and being above what you truly want to spend because the interest rates are where they're at. Just be creative, guys. Another thing that I've started to see in the real estate realm, just from other realtors, other lenders, so on and so forth, that is a little bit deceiving and may skew your opinion in terms of buying, is people talking about year-over-year prices, meaning saying, hey, it's now October of 2022, and if you're comparing prices to October of 2021, you're still ahead. Well, the thing is that a majority of that appreciation and gain was from October of 2021 to the first few months of 2022, midway maybe through 2022. There's been a significant decrease in prices over the last couple months, and even though you may be year over year ahead from October of 2021, just be aware that that's kind of a tactic and a shady one at that when it comes to looking at purchasing a home. And the last thing I want to touch on, guys, right now is new construction. So when it comes to new construction homes, if you've been purchasing a new construction home probably in the first 6 months of 2022, you were probably having to contract that one well in advance, months in advance, having to wait for forever, probably not making any choices on the property because builders were trying to build homes so fast and at such a quick pace that, you know, they basically had to say, hey, every house is going to have this floor, every house is going to have this type of tile, so on and so forth. Now, if you are an individual that is looking to go new construction, let's say, hey, you're renting right now and new construction is the route that you want to go, I can tell you, you have a whole bunch more options than you did probably in the last 2 years. Now, the days on market when it comes to new construction has absolutely blown up. And this is because of the fact that builders continued to build a ton of homes at such a quick pace. And when you have a real estate market that absolutely falls off of a cliff, now you've got homes from builders that are being held that are just taking forever to sell. No longer is it a market where people are signing up on massive wait lists and overbidding other people to be able to get those houses. Now you can even go into a builder, pick a lot, design the house from scratch, or you can go after an inventory home. An inventory home is a house that the builder has already started to build, and a spec home is a home that is already completed from the builder. Both an inventory home and a spec home is an opportunity for you to get a tremendous deal. Now, obviously, working with an appropriate realtor in your local market to negotiate for you would be a huge asset, but I would say new builds are a huge opportunity moving forward. So I wouldn't necessarily say to avoid new construction. It's a huge opportunity right now to get in. I wouldn't probably be the one that's building a home because they're not going to give you as much of a discount, being the fact that they're going to be taking the next 10 months to build the house. But let's say you find a house you're ready to buy now, it's been sitting on the lot and hasn't been sold. I guarantee you're going to be able to get a good discount on that home, and the reason being is because they cannot hold homes for forever. It's costing them, especially where interest rates are now, it's costing builders more and more every day to hold those homes. They more than likely have a construction loan similar to what I had on this property with my commercial building and what I have with my Broken Bow cabin, where it's an adjustable rate where over time, the more money that they pull and the more money that they use, they're going to be paying more interest on it. And on top of that, if they aren't able to sell a house that basically could be moved in and closed on today, they're just burning a hole in their pocket. So just to recap, guys, mortgage rates are key when it comes to looking at where the real estate market is headed, but that's going to be decided by where, hey, the inflation is going to come in at. Like I said, it should be coming back in the next couple days, where we are looking at in October of 2022. Cross my fingers and hope to see better news than we saw just a month and a half ago. And then when it also comes to Fed rate hikes, now we are supposed to have a couple more before the end of the year, and then I think a couple more at the beginning of next year, just to get to a certain threshold. Now I've been hearing some good news on that aspect, where we have been having too many Fed rate hikes too fast to where they're actually going to slow it down. I can tell you that would be also something that would send mortgage rates down as well and open back the real estate market to not as crazy as what we have seen in the last couple years, but certainly a little bit better than where we are now. If you guys have any questions, make sure to leave a comment down in the comment section below. Make sure to like and subscribe. It really does help, and stay tuned for the next video.